British Prime Minister Rishi Sunak this week called a snappy election for July 4th. What are the chances the Conservative Party can erase a 20-point deficit in the poll and cling to power? And does it make any difference which party gets to run Britain in the next 5 years? What are the challenges facing the UK economy in the new global paradigm? What is the outlook for the pound? Sunak's decision to face an election in the summer, as opposed to later in the year, caught many people by surprise. But it is not completely without logic. Data released this month showed that the UK economy, emerging from recession, grew 0.6% in the first quarter. Moreover, inflation in April fell to 2.3%, the lowest in nearly 3 years. Meanwhile, consumer confidence ticked higher in April to reach the highest level since January 2022, before the start of the Russian-Ukraine war. Things have definitely improved, but the question is whether they've improved enough to swing the balance in favor of the Conservatives. The polls do not seem to suggest so. The Unbound G7 political poll survey shows a remarkable consistency and stability in voter preference for the Labour Party over the Conservatives. Underscoring this finding is the fact that we see very little improvement in the approval rating of Rishi Sunak in our survey. Remarkably, Sunak's approval rating is near the bottom of the ratings among the G7 heads of state. It says a lot about the low opinion of Sunak held by the British people right now, that his approval rating is even lower than those of the highly unpopular Justin Trudeau and Emmanuel Macron. I cannot help wonder what Sunak is thinking right now. Maybe he's thinking about the 1992 UK election that saw the Conservatives led by John Major coming from behind to pull off a surprise victory. However, Labour's lead before the 1992 election was far smaller than its lead over the Conservatives right now. It seems to me that to win, Sunak needs a miracle. The Conservatives won a landslide victory in the 2019 election with a campaign that promised to get Brexit done. In my view, the reason why the Conservative Party deserves a resounding defeat in 2024 is because it failed to make the most out of Brexit. I'm not embarrassed to admit that I was a supporter of Brexit in 2016 and even in 2019. I truly believed Brexit could have been good for Britain. However, I have to admit that more than 8 years after the UK voted to leave the EU and 4 years after officially exiting the EU, Britain is clearly worse off. Brexit was supposed to unshackle the British economy from the tyranny of the European Union. But what really happened? Unsurprisingly, British exports to the European Union have not grown since Britain exited the EU. More surprising is the fact that British exports to non-EU countries hardly grew either. In other words, what Britain gave up as a member of the EU, Britain did not gain back by selling more to the rest of the world. Indeed, net-net, we can say that Britain lost out, as the share of British exports to world exports has fallen sharply from 2.8% to barely above 2% over the past 5 years. This compares unfavorably to even France, that is considered one of the least competitive economies in Europe. The sad news is that if the EU is moving on from Brexit, Britons have not lost their appetite for European goods and services. Indeed, UK imports from the European Union have grown more than EU imports from the UK. As a result, UK trade deficit with the EU has worsened further. But trade has not been the only drag on the British economy. The loss of unfettered access to the EU market has made the UK less attractive for both European and non-European capital. As a result, non-residential fixed capital investment has grown more slowly in the UK than other comparable economies like the US, Canada, and even France. GDP is the sum of consumption, investment, exports, minus imports. Brexit has been a drag on both British investment and British exports. But the reality is even worse. As the result of Brexit, immigration into the UK has slowed sharply. Indeed, since the Brexit vote in 2016, the working age population between 25 and 54 in the UK has hardly grown. This is not a problem. It might even be a good thing for the British people when the unemployment rate was high. But when the unemployment rate is low like right now, labor supply constraint not only limits the ability of the economy to grow, but shortens the economic expansion by driving up inflation and interest rates more than it would have done otherwise. The fact that the British economy went into a recession last year and the Bank of England had no scope to lower interest rates is a case in point about what I'm talking about. The bottom line is that not only Britain is not better off after Brexit, it is distinctly worse off. Even after the recovery from the pandemic, British per capita GDP is still lower today than the day Britain exited the EU. Brexit was a harbinger for the fragmentation of the global economy. With both protectionism and anti-immigration backlash on the rise, stagflation is not just a risk anymore, but very likely a final destination for the world economy. It is reasonable to assume that countries that do not have the economies of scale and do not belong to a free trade area will be most prone to stagflation. Among the major economies, the UK definitely comes to mind. What's more, 23% of UK workers are unionized, compared to 16.5% in Germany, 14% in Australia, 10% in the US, and just 8% in France. Labour will say whatever it will take to win the election in July. But at the Labour Party conference in September last year, the Deputy Labour leader Angela Rayner promised to repeal anti-union legislation such as the 2016 Act within 100 days of taking control of the government. She also said that a Labour government will make it easier for unions to be recognized by employers, reintroduce sectoral bargaining in the private sector, and impose a common floor on pay and conditions across whole industries. For investors, the writing is on the wall. At this point, the best election outcome for the UK economy and UK markets is if Labour does not win an outright majority. However, an alliance between Labour and the Scottish National Party is probably not much better than a Labour majority. Vince Cable, the former leader of the Liberal Democrats, recently poured cold water on the idea of a coalition with Labour, which will require two-thirds majority support from the party members. I think the Bank of England is far from taming inflation, with core inflation at 4% and services inflation at 6%. I also think the UK economy is not yet out of the woods, as evidenced by the weak April retail sales. I suspect the British economy will not help the Conservatives at the polls. With the election set for July 4th, Sunak's plan to send asylum seekers to Rwanda will not be implemented before the election. My prediction is that Labour will win an outright majority. I think the market will not like that outcome. The British pound has been boosted by the stronger than expected inflation reading this week. However, with the market having already pushed back the first Bank of England rate cut to November, I think sterling will be lower against a basket of 50% dollar, 50% euro between now and the election day. Thank you for listening.